Hello, I'm Aaron Norris. This is June 4th, and this is your real estate headline roundup in 2. So first up, banks have recognized 60% of expected loan charge-offs according to a new Moody's report. So that's $436 billion out of the expected $744 billion of loan charge-offs. I don't really understand how they're calculating that if losses are still occurring. We'll wait to see how that pans out. HopeNow, which is an alliance between counselors, mortgage companies, investors, and other mortgage market participants, released April numbers that 172,000 consumers got their loans modified. That's up 46% from last year, totaling 409,000. While they're quoting permanent loan modifications, I'll be interested to see how many actually stick and how many fall out of these permanent situations. Bank of America released some news this week about its principal write-down program. This is along with the HAMP program, sort of a version of their own, where they're actually reducing principal as part of one of the first steps in the loan modification process, hoping that this is a little bit more successful. It's a program where principal is put aside and is reduced as long as the borrower remains current. We'll see how that works out long term and if people stick with the program. All right, California Senate Bill 1178. This is, of course, sponsored by the California Association of Realtors, and this is the anti-deficiency protection for consumers who refinance their home and didn't realize that they gave up some of their rights. It's moved from the Senate now to the House to get passed, and we'll be following that. This is, of course, a purchase money mortgage program for those that refi, not for cash-out refis, so don't want to get that mixed up. So the stock market is none too happy about the unemployment numbers that were released today. So unemployment went down from 9.9% to 9.7%. However, a lot of Wall Street just not happy with these numbers considering all the stimulative efforts that's been tried by the government and considering that census jobs is a huge portion of those jobs tracked as being created. I'm going to start calling this section Acronym Friday. If you can keep up with all these acronyms coming out, Freddie Mac has come out with its own HalfA program. So this is the Making Home Affordable Foreclosures Alternative, known as HalfA, which is a subset of the Making Home Affordable Modification Program. So if consumers don't qualify under HAMP for a loan modification, they go to HalfA, which basically pushes them into short sale or deed in lieu of foreclosure. Guidelines can differ from Fannie Mae to Freddie Mac, but this is the GSE's version of the HalfA program. You'll want to check that out on their website. Information is posted there. Another bill we're keeping an eye out in California is SB 1639. This is known as the Facilitated Mortgage Workout Program. Another acronym, FMW. This requires a face-to-face meetings between homeowners and their lenders. This is a California reaction to what's going on in the market and on top of HAMP and HalfA and everything else that you got to keep track of. So we'll be following this to see any developments coming up in the near future. Tomorrow I am headed to Texas and excited to attend the REO Expo 2010. This is put on by Housing Wire and lasts from June 5th all the way through the 9th. Bruce is actually moderating a panel called The Incredible Bulk, which is going to feature Sarah Letts, the Credit Loss Management Director for Fannie Mae, John Murray, the Executive Vice President for SoCal Avalar Investment Group, Josh St. Romain, the Phoenix Collateral Advisors, Peter Wayman from Freddie Mac, and Fontana Fitzwilson of Williams & Williams. They'll be talking about bulk buying and the process of how it's working, how it will work moving forward. So exciting to learn more about that, and I will report on it next week. Actually, I might have just been kidding. Next week we actually might be dark since I'm in Texas up until Monday. Tuesday we have an REO Boot Camp, and then Friday through Sunday we'll be taking Bill Tan's Creative Investment class, which we're very excited about, which takes place in our vault. So I want to have a place to do this, so you're going to have to wait till Monday, so hopefully you can wait and we'll get it done then. Our June 26th meeting, the Advanced Strategies Seminar in San Diego, had to be moved to August 15th because of schedule conflict with Bruce. Check out our website. It's August 15th. It's going to be held in Anaheim. We'll also next month be at the Invest Club for Women and Investors Workshop doing 2 different evening events with them leading up to the seminar. And the last one at an Investors Workshop features Sean Watkins doing a panel discussion with Bruce, which was a huge hit last year, so I can't wait to see that. We're very excited this week to have our last installment of Rick Solis. He's the appraisal for the Norris Group's Hard Money Loan Division on the radio show. And the week after, we're hoping to have David Kittle, who is, of course, the former chairman of the Mortgage Bankers Association, and he was also on I Survived Real Estate 2009 panel, which we've won some awards for, which I can't wait to share with you in our next week's segment. I heard a really good rumor that tomorrow Tony Alvarez will be doing a one-day event in Los Angeles at IRCA. You can check out the REOmentor.com. I went last year and it was a really great event, and I think this one is a little bit different. For more information on our events and our hard money loan program, of course, check out the norrisgroup.com. If you'd like more information on our trust deed investments, check out tngtrustdeeds.com, and you can even check out our new Kindle book on amazon.com. Just look up Bruce Norris. Have a safe weekend, and we'll see you in the next segment.